Hello and welcome. You tune into Your Trades with me, Ankita Saxena, and this is a show where we get you what the week look like and how is the next week going to pan out for the for next week, and how the market really shaped up in this week and the coming week. How is it going to be like? So let's take stock of what really happened. Let's quickly take a wrap of in this week we managed to hit the 2025 high this week. In fact, it's just since yesterday that we see the decline coming in on the Nifty, but before that we were doing pretty well till the market jitters actually creeped into the market. So as far as Nifty is concerned, it has closed above the 24,300 levels. But if you look at the Nifty Bank, also Nifty Bank has also managed to hold up, but it has managed to hold up those 55,000 levels, and today it declined a bit, but we are nonetheless managing to sustain above the 55,000 levels on the Nifty Bank as well. But for the rest of the counters, if you see, we did have the mid caps that advanced for the third week. The realty sec pack also advanced for the third week. The top sectoral gainers were Prestige. Godrej Properties also advanced. Auto also was sitting at a 3-week high. Pharma also, even Nifty Energy, Bank, all of them hit the 3 weeks high in this week. Nifty IT is one name that to watch out. That is watch out for, because yesterday Nasdaq did pretty well on the back of the stellar earnings that some of the tech majors posted. On the back of that, we saw that ripple effect coming in on the Nifty IT in India as well, and we saw Nifty IT also advance for the 3-week. It hit its 3-week high in this week. FMCG was on the back foot. FMCG declined for the second straight week. We had a couple of names like Patanjali, Colgate that led the losses. Nifty Metals also hit 2-week low in this week. So that's how the sectors fared, in this week's trading session. But a couple of other, top news for the week that we saw. We did see resilient sales coming in from two-wheelers in the month of April. We also had, the Made in India iPhones for the US markets. The big news coming in that India will be manufacturing iPhones for the US markets. We also had the fact that Reliance added a market cap of 1 lakh crore on the upbeat commentary that came in from the Reliance fact. So Reliance was also aiding the Nifty this week with a jump up that we saw coming in. Finally, the Reliance stock moving up in this week is what we saw coming in. We also had the M&M and the Isuzu deal, the SML Isuzu deal that happened, where M&M has taken stake into SML Isuzu. So that was also in focus today. And besides that, France has also signed a 63,000 crore deal for 26 Rafale jets. So these are one of the couple of top news. Also, the defense pack was in focus today, focus in this week on the back of the escalating tensions on the border. Because of that, the entire defense pack was also moving in this week. Also, Indent Bank is another name that we need to mention, because the two news flows, the MD and CEO resigned for Indent Bank. Also, today we got to know that there was no malpractice happening on the back of the insider trading happening as far as Indent Bank is concerned. That's the word coming in from RBI. On the back of that, Indent Bank ran up today with gains of 3.5+%. So that's how largely the week shaped up. But let's get on board. Akshay Bhagwat, who's the Senior Vice President, Derivatives Research, JM Financial Services, and Mr. Sudeep Bandopadhyay, who's the Group Chairman of Indie Trade Capital, who are joining us. Hi, good afternoon to both of you. Thank you so much for joining us. Well, to understand the levels firstly, or how the market is likely to shape up, Akshay, let me come to you first. Now, we did see a little bit of a pullback coming in on in the markets, a bit of a breather, a break coming in the market after the run-up that we saw. You see, this is more sentiment-driven, and there could be a move up from here on, or are we really poised for a bit of a consolidation before we start the next leg of rally? And what are the levels to watch out for?
Good afternoon. Well, yes, this is more of a breather, a time correction, as you may call it, because week on week, if you see, this is the 4th consecutive week that Nifty has closed in the green. The only thing which bothers the market right now is the escalating tension on the border side that about India and Pakistan, that is keeping the trade slightly on a slippery footing. Traders are not ready to commit positions ahead of long weekend, ahead of the weekend. So that is where you are seeing some bit of price rejection once Nifty is testing the levels of 24,400, 450 zone. But the broader technical setup is still positive. The number flow from the FIIs are still buoyant, and there is no reason still to believe that it's a weak market. So overall, the trend stays strong till we trade about 23,800, and broadly the setup indicates the market to head for upsides of 24,800 to 25,000. So that's the broader targets we are working with. It is just a matter of levels. If you were to micro time the levels, 24,450 on the upside, that's a slight resistance, and 24,150 on the lower end. This is the band which we are dealing in right now, but the broader setup for the market still is on the positive side.
All right, a bit of a breather coming in there, but the setup looks positive rather. But coming to you, Sudeep, tell us, how do you see the markets? Now, there is obviously a jitters in the market, which can be felt, a bit of a trepidation coming in on the front of geopolitical tensions. But if you look at the macros, it's a good macro setup, right? The dollar index has cooled off, the bond yield has cooled off. Also, the FII flows have reversed. We are seeing FII buying coming in to India after a very long time, right? So the setup is pretty ripe for Indian markets right now. So how do you see the markets move from here on?
Well, you're absolutely right. The FII inflow, I mean, after many, many months, April, about 500,000,000 net flows came in from through the FIIs, and that's definitely a positive. I think what's apart from the positives, what's bothering as far as the domestic markets are concerned is that demand hasn't yet picked up, and that's pretty apparent when we look at the FMCG numbers, we look at the two-wheeler numbers, and we look at the consumer durable numbers. In spite of the expectation that fourth quarter we will see a revival in demand, I think unfortunately that hasn't happened, and that's a bit of a dampener as far as the Indian markets are concerned. Of course, we have a couple of positives. One is prediction of monsoon has been extremely good, both from SkyMet as well as IMD. And the interest rates in domestic markets are coming down. RBI has already cut twice, and a couple of more cuts at least are definitely expected going forward. Now, these are definitely on the positive side, and probably that's what is holding up the markets. One is these positives as well as FII inflows, which has been holding up the market. We also have these challenges in terms of the border escalation and the trade war related consequences, which nobody is sure what's going to happen and where it's going to end. So it's a bit of a volatile scenario as things stand. And we'll have to be prepared for this volatility. A market, to my mind, will remain range bound, and breakout on either side is not likely to happen in the near future unless we have some conclusive solution on the trade war front or India-Pakistan issue.
All right, point taken, Sudeep. Coming back to you, Akshay, tell us, we did see a Nifty IT, pick up today because of course, what happened with NASDAQ and the earnings that came out above expectations for big tech giants. But, they say that Nifty IT has seen considerable correction, right? But does that really make Nifty IT a good sector to park your money, just because the valuations are now there's a valuation comfort, because the fundamentals still seem a bit bleak as far as the IT pack is concerned? So what do you see on the charts for Nifty IT?
Well, if I were to look at the chart structure, IT had a bad run since the last 4 to 5 months. There was shorting bets in majority of the IT names. So the respite rally comes in the last 15-20 trading sessions. And even if you were to see the numbers, the way the stocks are reacting, even on muted numbers, the reaction has been pretty positive in most of the big IT names whose results, so quarterly numbers, have been declared as yet. So I believe, yes, if you are looking at whether this is more of a pullback rally or if whether still downside is left, overall, looking at the price structure, I think from a risk reward perspective, we have recovered from the bottom areas where there is a strong support in the IT sector as a whole per se, and it might take some more time for it to steady itself, form a clear support, and then stage a momentum rally. But at least the downside looks capped for me here. Strong names here would be Tech Mahindra, HCL Tech, and a TCS with Dixon Technologies. These are 3-4 names in the IT pack which look good technically, where the positioning is pretty strong in the May month. And overall, my belief is that a bottom is in place. Downsides may be there a little bit here and there for trading, but overall, this is the sector where you can start parking your money if you have a time horizon of a 2 to 3 month perspective.
So 2 to 3 months perspective, it might be a good bet to park your money from a short-term perspective. But Sudeep, let me come to you then. I want to talk to you about a specific name that has been in focus for a while now, and that's Indent Bank. In fact, the 2 news flows came in on Indent Bank, one that the MD and CEO has resigned, and the other one being that today, that yesterday RBI said that there was no, malpractice or insider trading that happened on Indent Bank. But how do you, what do you make of firstly this resignation? Is there going to be, are there better days ahead post the resignation, because a new team is going to be likely to take the future for Indent Bank forward? Is it going to be a smooth transition? And what do you see for the bank and for the investors going ahead?
A couple of things. One is, the exit of the MD was definitely on the cards. RBI had given only 1-year extension, and it would have happened in any case. So I think that got expedited because of all these happenings. And of course, initially it was that forex accounting related issue. Then we had this microfinance challenge. So the MD exit, taking moral ownership, was probably overdue. Fundamentally, if you look at the bank and at valuation, I think it is attractive. The bank obviously will have to book a loss in this quarter, and that is expected. But overall, the capital adequacy is okay. The promoters have already categorically mentioned that if necessary, they will pump in more capital. The bank, in terms of valuation, and if you do a peer comparison, I think it's attractively valued. It is fundamentally, we believe, a strong bank, and after all this cleanup, I think it will be on a good wicket. So, for a little aggressive investor, I think it's a good buy at current levels.
A good buy at current levels as far as Indent Bank is concerned. But Akshay, tell me, let's talk about the banking pack, Nifty Bank, because banks have and financials have been clear outperformer. They also took a breather now. They're taking a breather now. But Nifty Bank is in the range of 54 to 56,000 in the last 8 to 9 sessions. So will the consolidation, is the consolidation likely to continue, or how is the Nifty Bank going to move ahead now from here on?
Yeah, my belief is this is more of a time correction or a consolidation phase for Bank Nifty. You had a phase in the last 1.5 month where Bank Nifty clearly took the leadership. Now it is the time where Nifty takes on the leadership. Probably the banking sector might go on the defensive. That does not mean that there is going to be a correction, but it's going to trade in a sideways nature. Even if you were to look at the rollover data for the month of May, the rollovers are a bit on the slower side for the month of May. So clearly the indications are that you may have a sideways move in the Bank Nifty. Probably 54,000 is the lower end of the range, and we are looking at 57,000. Probably if Bank Nifty does stage one more upside momentum take, that may be the upside for the month of May. So clearly, yes, it's a sideways move which we anticipate. Bank Nifty will remain strong, but confined in a trading range for major part of the coming month.
I'll come to you, Sudeep, then, and my question is on financial. The entire financial basket actually has been a common consensus, especially the NBFC side of it, because of the valuation comfort, also with the strong balance sheets of some major banks. Where do you see, pockets of value within the financial space? Would you concur with the fact that the NBFCs are a better place to park your money right now?
I'll be a little cautious, and I won't blindly classify them as NBFC and start putting money. I'll look at the category in which they are operating. Look, we are already aware of the fact that microfinance as well as unsecured loans are under significant asset quality pressure. So the NBFCs having significant exposure in these businesses are best avoided at this stage. The general belief is the pain is not yet over. Couple of more quarters, probably we will see pressures on asset quality. So I think it's avoidable. If I have to look at the NBFCs, I'll probably look at the gold financing companies. I think this is where I think the significant opportunities exist, and the way the gold prices have moved, the way the companies have managed themselves, the regulation has fallen in place. I think that these are good places to look at. Both Muthoot and Manappuram, which are leading gold financiers of the country, can be looked at. Apart from NBFCs, I strongly believe that there is value in BFSI overall, and particularly the banks as well. And PSU banks is one more space where value can be looked at. And the leader in the PSU banking space, SBI, of course, it comes out with its results soon. And one has to look at the margins, how the margins are maintained. They're talking about fresh equity issue, which also needs to be understood. But fundamentally, I think SBI looks good from a long-term point of view, from an investor's portfolio.
All right, SBI out of the financial name is looking good to you. But let me come to you, Akshay. Talk to us about what would be your sectoral preference, because of course, financials is a common consensus, but on the charts, which sector is looking lucrative to you?
Well, at the current moment, if you are a short-term trader and chasing momentum, clearly the auto sector is one sector where the momentum is returning back. Again, this was one of the sectors which was beaten down, had a rough patch along with the Nifty index, but it has come out hard. There is a clear support in the making in majority of the stock names in this sector, and the recovery also is pretty hard as we look at the charting on majority of the names. So I would bet on the auto sector from a sector per se, and if I were to pick up one name in this, I think from a bottom fishing perspective, with a buy and hold with a minimum 1.5 month time frame, you can look forward for Tata Motors, where I believe this is a good value buy, where it is technically highly oversold, showing good signs of recovery from the bottom, and clearly 682 and 697 can be the targets in the making, with a stop loss of 630, which you have to maintain on this short-term trade.
All right, point taken. But coming to you, Sudeep, what do you make of the auto pack? Because like Akshay mentioned, the momentum is coming back on the auto pack. Now, with that announcement of Trump exemption of tariffs, the auto sector started doing well, but there are still some fundamental concerns, like as far as the auto sales are concerned, because of the entry level is still suffering, the domestic demand is under pressure. How do you see the auto pack?
So you are absolutely right. I think the biggest concern is the domestic demand. And I think other than passenger vehicle segment and to an extent tractors, the other segments are witnessing significant pressure. There are, of course, outliers, a TVS in a two-wheeler category, and a Mahindra and Mahindra probably in the overall automobile segment. But by and large, whether you look at Maruti, whether you look at the Bajaj, or you look at Hero Motocorp, I think all of them are under pressure because of the demand. So I'll be a little careful. I think fundamentally, the exports may or may not be doing well, but their business and their performance predominantly depends on how they're doing in the domestic markets, and domestic market is not supporting them at this stage. If I have to pick up an auto share, I think I'll go and pick up Mahindra and Mahindra. The reason being that I think the valuation wise also it is attractive. The tractor segment is picking up, and we believe that the monsoon for which the prediction is good will give a leg up. SUV, they're doing very well. They are getting into the leadership position and maintaining that. So overall, Mahindra at current valuation looks good. Otherwise, the auto sector, I'll be extremely careful.
All right, careful on the auto sector. But Akshay, let me come to you and ask you for your picks. Any buy calls coming in for you?
Yeah. So Tata Motors is one which I just discussed a couple of minutes back. The other stock you can look forward to is Bajaj Finance from Financial Services. The results have been done, although there was a negative reaction on the day of the results. I believe there is a stock split and a bonus in this, and this is going to keep the downside cap on this stock. Technically, a very firm price structure, which gives you a target of 9275. You can maintain 8615 as a stop loss on this trade.
All right, those were your two picks. Thank you so much, Akshay and Sneep, for joining us and weighing in on the markets. We will let you go on that note, but thank you for joining us today. And moving on then, an impending growth slowdown in India is on the back of a slew of triggers, tariffs, volatility and capex, and with trade tensions the two economic might showing no signs of easing. Here's an excerpt of the chat we had with Chetan Ayya as he details his rationale.
India is doing well on a relative basis, but look, on an absolute basis, everybody is going to take some pain. And so, as I mentioned, for India, we are building in a 50 basis points growth slowdown from 6.2 on a quarterly trajectory to 5.7 over the 4-quarter period. So that is going to be still, something that cannot be avoided because India is still sitting in this world, connected with the rest of the world. The part that is good in India is that there is a structurally higher dependent on domestic demand versus external demand. And at the same time, there was a bit of a blip in the government spending because of elections last year. That has come back. So the support from government spending is going to be quite critical in this environment. And so hopefully we don't see a compromise on those target numbers that were laid out in the budget on capital expenditure. But so I think, yeah, India's domestic demand dependence is high, and that is on a structurally higher path. So that's going to be an offset. We do expect China to take up meaningful fiscal expansion. So they will increase their expenditure by about 3.5 trillion RMB in this year, which would be about 2.5% of GDP. So that's a sizable stimulus that they will take up. But to the extent to which the damage will be quite significant, not only because of exports, but also their own domestic private capex cycle. We are still building in a 170 basis points slowdown in China's growth rates from 5.4 to 3.7 by 4th quarter of this year. So 5.4 was in 4th quarter of 2024. It will slow down to 3.7% by 4th quarter of this year. And in terms of the distribution of that stimulus, we're expecting 60% of it will be targeted towards pushing in more investment, and 40% of that stimulus will be targeted towards consumption. So yeah, I think it's going to be meaningful, but it will still not be able to avoid this big slowdown that will come through.
All right, with that, it's a wrap on this edition of Your Trades. I'll take your leave. Thank you so much for tuning in.